Hello and welcome to the Money Street. Today we are going to talk about one of the most important concepts that a person has to take into account when managing his financial capital. In this case we are going to talk about inflation, something intrinsic in the current monetary model in which we live, and what effects it has on our capital and our personal finances on a daily basis. As society has evolved, we have gone through different monetary systems, so let's take a brief look at each of them. We start with commodity money, such as gold, silver, salt, among many others. This means of payment is a physical commodity whose value comes from the fundamentals that compose it. After this we had the representative money. With the appearance of the first banks, people deposited their coins and were issued a certificate for the amount, which served as a means of payment. This money was backed by gold, silver, oil, i.e. its value was based on another asset and could be convertible to the asset it represented. Finally, fiduciary money appeared. It is not backed by metals, but by a promise of payment by the issuing entity and is based on trust, i.e. people accept this money in exchange for the goods or services they sell, since they expect it to be respected when they go to buy other goods and services. It is known as inconvertible money or paper money. The money that governs countries today is nothing more than a type of fiat money, which is money by decree or fiat money issued and legally validated by a government, for example the euro, the dollar, the yen. If we look up in the dictionary the meaning of fiat currency we see that it is a currency that represents a value that intrinsically it does not have, unlike commodity and representative money, which do have intrinsic value because of what they are and what they represent respectively. At this point we wonder what implications it has for a saver and an investor that today we use fiat money. Today's banknotes and coins have as much value as indicated by the printed number on them, but it is not backed by anything to stabilize it, but will increase or decrease in value according to the confidence of the market. One of the main characteristics of fiat money is that it is controlled by authorized bodies and entities such as central banks, for example the Federal Reserve or the European Central Bank. These entities have several functions, such as preserving the value of the currency, preserving price stability by controlling interest rates and maintaining the stability of the financial system. These entities have a series of rights that no one else has and are the only issuers of fiat money. They are financial agents of the public debt of national governments. They are lenders of last resort, in other words, a bank of banks. They are also supervisors of the solvency and compliance of credit institutions. Considering the functions that central banks have and the rights that all governments grant them, we might think that our economy is safe, as there are hundreds of people working to fulfill these functions. For example, maintaining the value of the currency, maintaining price stability and maintaining a healthy financial system. In these two graphs we can see, on the one hand, the evolution of the purchasing power of the dollar and the pound, and on the other hand, the evolution over time of US and UK interest rates. On the left side of both graphs we see a lot of stability over 100 years, except for the time of the War of Succession. However, over the next 100 years we have seen the opposite, a loss of purchasing power and considerable volatility in interest rates. It is clear that something had to happen in 1913, and that is that at the end of that year the Federal Reserve System was created. Obviously we must also add that in 1914 the First World War started, but according to the functions we have seen of the central banks, this situation should have been reversed as the years went by. With the creation of the Federal Reserve, the dollar ceased to be representative money backed by gold or silver, as we can see in the banknotes at the top, but became fiat currency, as are the current banknotes, those at the bottom. This implies that there is no limit to what can be issued, nor does this issue follow a pattern, but depends on the needs and political strategies of the bank and the state. If you are enjoying this video and want to be aware of new videos, subscribe to this channel and turn on notifications. It is also worth mentioning that fiat money is the property of the issuer. When we use it, we are only holders. As it is the property of the issuer, he may choose at some point, and according to his interests, to devalue the currency, affecting exchange rates, imports, exports, and ultimately the purchasing power of the people who use that currency. In addition, when the time comes, the state can prevent the withdrawal of capital, as we have seen in some countries in recent years. Moreover, as we can see in the following picture, since the Federal Reserve was created, the purchasing power of $1 in 1913 became 5 cents in 2013. What we are seeing with the dollar can be extrapolated to any fiat currency, such as the euro. This loss of value is known as inflation. In other words, inflation means that a given amount of money is able to be exchanged for less and less things. That is, it can buy fewer goods and services. This has a great impact on our daily lives, for example in the shopping basket. As the years go by, we lose purchasing power. But the problem does not end there, but all those people who save and do not invest, with the passage of time all that money loses value. Let's remember that beyond the short-term needs that we may have at an economic level and the existence of an emergency fund, we should not have more money in the bank account. The monetary expansion of the last decades has been monstrous. If we look at the increase in the monetary base, we see that right now we are approaching the 20 trillion mark. Since the gold standard was finally eliminated in the 1970s, although monetary barbarities have been taking place throughout the 20th century, the increase has been disproportionate. The purpose of these increases has been to artificially activate the economy, to save governments and banks from the crisis, and to try to activate the economy again. If after this video you are wondering where you can invest your capital, I recommend you to subscribe to our channel, where every week we post videos related to finances, investments, and economy. This way you can learn how to diversify your capital and how to manage it in your daily basis to create a life full of mind peace, wealth and financial freedom. But it is clear that not everything has worked out as they had planned. This is nothing more than the short-termism of society taken to political spheres. And by politics I mean central banks and national governments. Perhaps the idea that a minority group of people can run the world economy is not the best alternative. As it is quite likely that this will not change in the next 20 years, my advice is to look for real securities in which to invest your fiat money in such a way that you do not lose purchasing power over time. Thanks for watching The Money Street, and don't forget to click the subscribe button for more financial videos.